Hey, what's really happening in the housing market right now? Well, today on the Housing Nerd, I'm reviewing the latest Redfin updates so you're better informed as a buyer, seller, investor, heck, even realtor. We're going to look at mortgage rates. We're looking at home prices, both nationally and locally, and we're looking at buyer demand. You don't want to miss today's Housing Nerd video. But first, welcome to my channel. If you're new here, my name is Jason Ferrier. I'm a realtor and investor just outside of Columbus, Ohio. And I'm happy you're here. Thank you again for watching. Like, subscribe, comment. I want to know what's happening in your local housing market. By the way, Happy New Year. I hope you have a great 2025. So the name of this article is New Listings Rise 8%, giving the New Year's buyers more homes to choose from. They're right about that. There are definitely more homes out there than there were this time last year. So there's more choices and homes are sitting longer. You're going to see more of that data in a minute. So they skipped the article because of the holiday and they're just going into the leading indicator. So first things first, mortgage rates, daily average 30-year fixed mortgage rate as of the writing of this article, which was January 3rd, 7.07%. Actually, they state January 2nd, but nonetheless, it's over 7%, folks. And if you thought mortgage rates were going to decline underneath, 6%, we'd see like a 4 handle or a 5 handle on them anytime soon. I don't think that's going to happen. They seem awfully stuck and range bound, you could say, in that 6 to 7% range. Really, it's been 7+ range lately. So no doubt mortgage rates are higher. In fact, look at this year over year change. Mortgage rates are up 6.7% from last year. All right. Mortgage purchase applications. This is about demand. This is an indicator of demand and how many people are applying for mortgages. If there are a lot of people are applying for mortgages, it's safe to say that more buying demand could actually increase. If less people are applying for mortgages, the opposite's going to happen. So down 13% from 2 weeks earlier, and it's down 17% from last year. When I say last year, I mean 2023. So I should say from a year earlier. So down 17% from a year earlier. That means there's 17% less people applying for mortgages than there was a year earlier. Comment below. What do you think? Do you think buying demand is going to, go back up and skyrocket in the spring, or will it remain muted? You tell me in the comments below. I love hearing from you guys. All right, Redfin Homebuyer Demand Index. This is their proprietary Redfin Homebuyer Index that they, is showing demand. And it says essentially unchanged from a month earlier as of the week ending December 29th. It's down 1% year over year. It says Redfin Homebuyer Demand Index, a measure of tours and other home buying services from Redfin agents. So overall, they're saying buying demand is the same as it was a month earlier, but down 1% from a year earlier. Touring activity down 52% from the start of the year. Last year, a year earlier, it was down 55% from the start of that year. So it's like, people are they're not as interested in the housing market right now as they were, in the fever of 2021 or whatever, or 2022. Google searches for homes. Look at this, up 30% from a month earlier. I was surprised at this. It means more people are Googling their homes now. Homes for sale. Like could be, people were bored during the holidays. I don't know. Maybe it's always that high, because look at this, from a year earlier, down 4%. So while it's up 30% from a month earlier, this time of the year, it's always up because people are at home on their couch, watching the football game, eating some food and searching for homes, I guess. Now we look at the highlights, the key housing market data highlights. This is for the top 400 US metros only. They aggregate all that info and look at selling price, asking price, new listings and such. And this will help us understand what's kind of really going on behind the scenes in the housing market. And a lot of these indicators are indicators you should look at in your local housing market to kind of gauge demand. Median sale price, look at this, $383,750, did not end up in 2024 less than 2023, did not end up lower. It ended up higher. I'd love to know what you think about this, because it looks to me like the predictions of home prices ending 2024 lower than the end of 2023 did not come to fruition. So we are higher. Median asking price, $373. Look at that. It's the asking price is actually under selling price. And there may be a reason why. I'll show you that in a minute. Median monthly mortgage payment, $2,500, up 8.1% year over year. So if you decided to wait because you thought prices would crash, burn, and there'd be some apocalyptic event in home prices like the GFC, and there'd be a wave of foreclosures or a wave of distress selling. Unfortunately, nationwide, on average or median, whatever you want to call it, you are spending now more than you would have a year earlier on your housing payment, 8% more. So waiting didn't help in this situation. Pending sales, 54,000 pending sales. That's down 1% year over year. So the number of home sales is definitely hurting because mortgage rates and prices are so darn high. New listings, 48,000 new listings. This is the other reason why pending sales are down. There's no new listings. New listings, folks, is like the key to unlock what's really going on in your housing market. New listings and active listings. If you're getting flooded with new listings and active listings, this $905,000 unit number here, if that is going up, that means your market's building inventory. And if new listings here are outpacing pending sales, which they're not nationally, then you would have an explosion of inventory. But when you look at the national averages and just national numbers for the top 400 metros, new listings are actually less than pending sales. It means that we're taking away more houses than we're adding to the market. You're not going to get a price crash that way, people. New listings is where it's at. Watch new listings in your local market if you want to know what's happening with the stuff behind the scenes, the data behind the scenes. 4.2 months of supply. That's up slightly because houses are sitting longer on the market. Not a ton of houses are hitting the market, but the ones that are hitting the market, if they're not priced right, and I know because I'm out showing houses every week to buyers. In December, I probably saw 50 homes, at least. The homes that are priced right are moving. If they're priced wrong, they're not. Price sells houses, folks. Pricing. So we are definitely up in months of supply. Share of homes off the market in 2 weeks or less, 23.7, down from 26. Homes are sitting longer. Median days on market, 47 days compared to 60. That's up 6 days year over year. Homes are sitting longer. Share of homes sold above list price, 22.9. I highlighted this because it's down from 24%. I think last week it was like near 20, or last update, it was like near 25%. So people on average are paying, they're not paying over asking as much as they were last year and as they were, certainly 2 years ago and 3 years ago. Average sale to list price ratio, 98.3%. That's down 0.1 points. So meaning people are getting about 1.7% discount on average when you look at how much the house is listed for versus the final sale price. But 22.9% of seller or buyers are still paying over list price. All right. So let's look. Oh, by the way, this right here, the median days on market, 47, up 6 days. This is why I think this info right here, this median asking price being less than the sale price could be because there are a lot of homes that are probably sitting on the market, not selling, no hope of selling. I call it wish pricing. Hey, my neighbor's home sold at 450,000. I'm listing mine for 470. Oops. It sat for 6 months. We had to have 5 price cuts. That's real. That happens. So make sure you list. If you're going to sell your house, you got to price it right. The days of just pricing wherever you want to, like whatever price you want to, those days are over for the most part. At least they are in Ohio. I mean, even with our affordable prices the way they are here, you still got to price the home correctly. All right. So the next section is the 50 most populous U.S. metros. This is where they look at the top 50 cities across the country and say, all right, who are the winners and who are the losers with pricing and new listings and whatnot. And depends really, winner or loser depends on if you want to crash or not. So median sale price, Milwaukee, Wisconsin, 17.4% higher than last year. Remember, nationally, we're at 6.3. Median sale price, 6.3% more than last year. Milwaukee, 17.4. Cleveland, 14.3. Philly, 13.5. Chicago, 11.9. Nassau County, New York, 11.8. So they increased. Look at this. Median sale price. Hang on to your hat. Increased in all metros they analyze. In the top 50 most populous US metros, there wasn't one metro where the median price at this period of time was under the previous year. Crazy. Pending sales, houses going into contract, the most in Detroit, Anaheim, New Brunswick, San Francisco, and Los Angeles. When I say the most compared to last year, not necessarily the most overall. Where pending sales dropped the most compared to the previous year: Orlando, Houston, San Antonio, Fort Lauderdale, Indianapolis. Pending sales increased in 16 of the top 50 metros. So in a lot of metros, pending sales are in the toilet. If you're a realtor, you're a loan officer, you're a title agency, you're definitely hurting. New listings: San Francisco, Oakland, Seattle, Virginia Beach, San Jose. If I'm in these cities, I'm watching this like a hawk and going, man, what's going on in San Francisco? 48% more new listings than the previous year. That's a big increase. Oakland, California, 36.6, Seattle, 21.6, Virginia Beach, 21%, and San Jose, California, 21.5% increase in new listings year over year. San Antonio, Detroit, Austin, Orlando, Nassau County, New York, all down year over year, the biggest in new listings. You can see declined in 8 metros out of 50. So 42 metros out of the top 50 increased in new listings. That's good. You need more new listings compared to last year if you're going to build inventory and have some type of price correction. Comment below. I want to know what you think about new listings. Will we have an explosion of new listings next year, or I guess this year in 2025? Or will we see the same thing, basically pathetic new listings, low inventory? And I want to know, are new listings exploding in your local market? Comment below. I love your comments. I learn a ton. It educates others too. So please comment below. All right, let's get to median sale price. Median sale price. This is like the charts everybody likes to look at. So going back to median sales price, you've got this blue line here is 2024. Look at it. Did it end up under 2023? No, it did not. No, it did not. Median asking price. That basically means people are asking 5.6% more for the median house. Remember, the one in the middle is median than they were the previous year. It just means people are not like discounting houses by a ton yet. Like they're not when they hit the market, they're not going fire sale. I got to sell this thing. New listings, median asking price, percent of price drops. Those will all give you clues as to what's happening with distressed sales in the market. But look at this. Like look at 2021. Soak this in for a second. I mean, back then, median asking price was like $325,000. Now, $2,000? Nuts. $373. Still a heck of a big increase from 2021. Home buyer housing payments up 8% year over year. Bottom line is it costs more to buy a house now than it did this time last year. New listings of homes for sale. Where are new listings exploding the most? It's the orange line, or I'm sorry, are they up more than last year? They are up 7.7%, which is kind of strange because look at the orange. I guess it's the blue line right here is what we want to look at. You can kind of see it. It's barely up. I mean, who's counting, right? At the end of the day, we need a lot more new listings. We need a lot more, guys, in order to crash the market. People ignore that part, but that's the way it is. Active listings of homes for sale. When you put a new listing out, it becomes an active listing unless it's purchased or taken off the market. Look at this. Up 9.7% or 10%, but it's falling. And it could actually meet, depending on what type of spring we have. If people stay locked into their current homes and they don't want to put them up on the market, you may see this actually go under the previous year. We may actually lose inventory instead of gain it. We were over 1 million units a few weeks ago. Not anymore. All right, 4.2 months of supply on the market. You can see this is going up. That's indicative of a housing market where homes are sitting longer. They're just taking longer to sell. Is what it is. You don't price your home right, you're definitely going to let it sit. The days of 50 grand over asking on the common suburban home, those days are almost over, or basically over. 24% of pending sales in the under contract in 2 weeks. You can see here, I mean, it's definitely, homes are definitely sitting longer. Again, just more illustration of that. Homes sold in median is 47 days. Yep, we know that. Now homes are just taking longer to sell. Look at this. Back in, what was this, 2021? homes were selling in a median of 30 days about. Now they're 47 days, definitely sitting longer. 23% of homes sold above final list price. You can see that right here. A lot lower than where it was back in 2022. Look at that. Over 50% of homes were selling above final list price. Average home sold for 98.3% of final list price. You can see here, it's still not under 2022. That's the red line. So in 2022, it was like 97, maybe, yeah, like 97.8. Now it's 98.3. So there are small discounts going on, but not a ton. Redfin home buyer demand index doesn't mean a whole hill of beans to me, but something else on Redfin that we need to talk about is their data. Do you think it's manipulated or not? A lot of people do think it's manipulated. So I actually put this up on my channel. This is a poll. I'm going to show you more of these polls as we go along because I love reading the results. When I took a picture early this morning, it shows, and my question is, Redfin is manipulating the housing market data. Yes or no? 73% of y'all said Redfin is manipulating housing market data. Well, I personally don't think they're manipulating it. I do think they change the data once it's revised because it's real-time data almost. They're gathering from like 300 MLS databases. There's going to be revisions. I don't know if you've ever revised data. Have you ever made a mistake or looked at data and said, oh, it changed. Now I got to revise it. They're changing data because the MLS data is changing. At least that's my take. But comment below and let me know what you think. Is Redfin some diabolical evil force in the housing market? Or are they just trying to do the best job they can? Let me know. Okay, so now we're going to look at specific local markets. Remember, real estate is hyper local. Now, if you have a market you want me to analyze, drop it in the comments below. I'll put it on my list. And then when I do the next Redfin update, sometimes I do a lot live, sometimes I don't. But in any case, I will get to that market. So I had a few requests, and then we're going to do our normal ones we do for the Ohio and kind of Midwest area. So the screen I'm on now is actually the article page, right? The summary page. But now I'm going to go to the Redfin weekly housing market data page. And both links are in my description below. They're free. You can go there anytime you want and do the same stuff I'm doing. It's not rocket science. So this is specific to metros or counties. And so what I'm going to do is look over here on the right, and I'm going to go to, first one is Columbus, Ohio, because that's where I am, is Columbus, Ohio. Now, sometimes it gives me, it resets for a second, so I got to ask it to, again, which I did. All right, so Columbus, Ohio. Same drill as we did nationally, but we're looking at these specific markets. So year over year in Columbus, we're up 3.8%. Not really anything to write home about. I mean, honestly, it's really bad. Like at the end of the day, you got to have a lot more new listings in order to increase active inventory. And here in Columbus, we're just not adding a lot of listings. Now, it always goes down this time of year with seasonality, but people are just locked into their low interest rates and their low payments right now, and many places, including Columbus. So now let's look at active listings. All right, so active listings in Columbus. Looks like it's up 16.97, 17%. Definitely heading down, always does this time of year. But if there was distress in the market, you would see these new listings and active listings buck seasonality, right? And start to go up when normally they'd be going down this time of year. All right, so a lot of those active listings, let's look at pending sales. How fast houses are going into contract or how many. Same thing, only up 2.4% in Columbus with pending sales. Garbage. Just not a lot of transactions. Probably a good thing because if there was a ton of transactions, there would be a lot less inventory. That's what happened during COVID, by the way. A lot of transactions, not a lot of inventory, and inventory got destroyed. All right, so that is pending sales. Let's do median sale price in Columbus. Look at this. Median sale price, $333,000. We ended the year 6% up compared to 2023. A lot of people, well, there weren't a lot of people here thinking there was going to be a crash. And unfortunately, there hasn't been. Prices are just unattainable for many first-time home buyers. They just still are. There are some deals out there that you can negotiate, but anything that is move-in ready, priced well, is going to move. And sometimes still has multiple offers, unfortunately. All right, so that's median sale price. So now let's go back to new listings, and I'm going to switch my area to Cleveland, Believeland. Cleveland, Ohio. Look at this. Different, right? Compared to Columbus. Cleveland down 6.8% in down 6.8% in new listings. So right now, or a couple weeks ago when they ran this, there were 6.8% fewer new listings than there were back in 2023. That's not helping inventory at all. Where's inventory now? Let's look at active inventory in Cleveland. Look at this. Almost a 3-year low, right? Look at that. Dropping almost to a 3-year low in active listings. Crazy. Probably because it's so affordable there. Pending sales. Look at pending sales. This is nuts. Pending sales are actually down compared to the previous year, yet inventory is dropping. Why? Because of new listings. Because new listings, look at the new listings. There's none. So when you're not adding any inventory to the market, even if you have horrible pending sales, you're still going to take inventory away. So pending sales, not good. All right, now let's do median sale price. Look at median sale price in Cleveland, 13% year over year. It peaked at $247, but now homes, median price in Cleveland, $227,000. Just wacky. I mean, completely unaffordable for the locals, I'd imagine. But there are still places in the U.S. with a pro football team that you can buy a house for under $300,000, and Cleveland is one of them. The next area is one of them as well. Let's go to Cincinnati, the nasty natty. Beat my Pittsburgh Steelers this weekend. The Steelers are just horrible at the end of this year. They don't deserve to make the playoffs. They're probably one and done in the playoffs. Comment below. Let me know what you think. Do you think the Steelers are one and done in the playoffs? I do. All right. I'd love to know who you think is going to win the Super Bowl. Okay, so new listings in Cincinnati, Ohio. 0% growth. Same thing as Cleveland, right? But I think Cincinnati has a lot more active listings. So let's look at active listings. They're up 45, 46% year over year, but now they're heading down. But with no new listings compared to last year, that number is going to stagnate. Pending sales. How fast are homes moving off the market or compared to last year? Pending sales, we're at 2.6%, kind of like Columbus. Nothing to write home about, but with no new listings, inventory is not building. See, this is it's very simple, the dynamics of the housing markets. If you can add new listings, if you can add to the coffers of new listings faster than your pending sales come off, active inventory is obviously going to rise. All right, median sale price in Cincinnati. Look at this, $289,000 year over year, up 9%. So you got Cleveland up 13%, Columbus up 6%, Cincinnati up 9%. Cats and dogs living together, mass hysteria. Unbelievable. All these three of those Ohio markets were just, our prices are outrageous. Are they going to go up like that again in 2025? I'd certainly hope not, but it doesn't look like it's slowing down. All right. So that's Cincinnati. We did Columbus, Cleveland, Cincinnati. Now I have some other requests near me. I've got Toledo, Ohio. Somebody requested Toledo. Toledo, Ohio. Let's do new listings in Toledo. Look at this. See, everything's hyper local. Down 17% in Toledo with new listings. Down 17%. You're not going to build inventory at all that way. That's just dismal. Dismal. Active inventory. Look at this. Same thing. It's underneath 2022 active units for sale, only up 3.35%. Houses are coming off the market faster than they're coming on in Toledo. Pending sales. Up 7.9% in pending sales. Yep. So in like Columbus, pending sales are like up 2 or 3%. In Toledo, they're up 7.9%. And then when your new listings are dropping like they are, you're definitely going to take away active inventory, and that's what happened. So I'm guessing sales price hasn't crashed. No, it's still up 11% compared to last year. Seasonality always brings down pricing, always brings down new listings, always brings down active listings and pending sales. It gets slower in the winter. But in Toledo, you ended the year higher than last year. You peaked in Toledo, $223,000. Now you ended up $197,000. So I guess there are spots you can actually buy a house under 200 or under $300,000. I'm sorry, under $200,000 in Ohio. Maybe that's why new listings are up like they are. People are like, man, I'm going to move to Toledo. It's cheap there. And Toledo's not a bad city. I've been there several times. I've looked at investing there. I've looked at a couple of apartment deals. Never pulled the trigger, but it's kind of its own microcosm market with Detroit right there. Speaking of Detroit, that's next. Got Detroit, Michigan, D-Town. Detroit Metro. New listings down 11% in Detroit. Whoever asked for this info, one of y'all requested this. It was Detroit, Toledo, and I've got some Michigan areas on there that I've never looked at before. I think they're looking for a house in that area. So if you're looking for a house in a particular market, put it in the comments and I'll analyze it. And then on the next Redfin update, I'll do these every week. Sometimes live, sometimes not. All right. New listings down 11%, just crazy. Okay. So let's do active listings in Detroit. Look at active listings down 2% compared to the previous year. Other markets are up a ton. They have a ton of inventory, like Austin. Not Detroit. Less inventory. Yikes. All right, pending sales. How fast are sales coming off, or houses coming off the market? That's next. 7.8. So yeah, you can see that uptick. Pending sales are going up this time of year when they normally go down. So that's why inventory is suffering so much. Let's do median sale price. 185,000. Similar to Toledo. Buy a house under 200 grand, up 6% year over year in Detroit. Just nuts. Okay, we're in this kind of area of the country, so I'm going to do one more, and that is Ann Arbor. Ann Arbor. And I'll give it respect, even though I'm in Ohio. Okay. New listings in Ann Arbor. Same like Michigan's destroyed maybe. Look at this, down 13% in new listings. Nuts. You'd think, like, since we've been so bad in new listings, eventually we would go up. Not so far. 16% increase in active inventory. So they are higher than last year, but now heading down. That's normal this time of year. How are pending sales, I wonder, in Ann Arbor? Pending sales. Wow. Pending sales down 27%. And there's no activity there. It's like not buying and selling anyway. And some houses hitting the market, but not a ton. Let's look at median sale price. Ooh, you almost went underneath last year. 388 grand though in Ann Arbor. Because of university, maybe? I didn't think it'd be that expensive there. Wow. Only up 3% year over year. So still haven't found a price crash yet. I'm still looking for my price crash. Haven't found it yet. I mean, they peaked at 448 grand in Ann Arbor last year. Okay, I've got a couple more and then I'm going to wrap this up. So I've got San Diego. Somebody requested San Diego. Actually, I think that's my last one. San Diego, California. This is going to look completely different than the markets we were just looking at. Look at San Diego, new listings down 5.8%, not an explosion of inventory. Must not be a lot of distress selling out there. Active inventory down, seasonality, but also new listings suck. Only up, it's up 26%, but it should be up a ton because we were in the basement with active inventory. Median sale or pending sales, let's do that. Pending sales down 7%, so less activity, a lot less new listings. How did median sale price do? Median sale price keeps chugging along. It did for a second drop under 2023 at one point, but now 888 grand, 880 grand. Who's counting at that point, right? That's the median sale price. The house in the middle, not the average, the house in the middle. Crazy, up 4% year over year. They peaked at 950 grand. No crash to report in San Diego. Because of the inventory, I would not look for that to change a lot. The same with the other metros we looked at today. That's just kind of how it is. Wow. Man. Okay. So that's the Redfin update. And that's what's really going on and happening in the housing market. Now, some experts have predicted what will happen to home prices in 2025. Where will we land? And I made a video that goes over their predictions from 15 different experts, including myself. Check that out right now. Right here, right here, right here. All right.